There we go. All right, welcome back, everybody. Chart Addicts live streams every morning, past I don't know how many years. This is stream number 297, I think, or 298, something like that. I can't count. Uh, it's going to be a bit of a different stream. I'm going to play one of our podcasts and kind of just let that thing run. Of course, I'll answer questions about any of the anything happening in the economy. Before we even start that, I'll cover what the FOMC's done and kind of where they might be making some policy mistakes here and how it might backfire on them. But most importantly, make sure to hit like and subscribe. Some housekeeping stuff is that we're headed to London October 2nd, I believe. October 2nd. You guys can head on over to the link in the description, go to events, and you'll see all of our upcoming events for the FX Summit. You guys can come meet us, meet the Chart Addicts team, a bunch of other traders in the industry, some institutional folks from some of the biggest institutions in the world will come and speak, try to get you guys to the next level in your trading. So London, October 2nd, we're hitting Barcelona, Croatia, and of course, the main course. November 20th, we're headed to Dubai for the world's largest trading conference, the FX Summit. Make sure to grab your tickets. Use promo code ChartAddicts for tickets to Dubai, and then use promo code ChartAddicts UK for access to the London workshop. Last but not least, if you've taken the Masterclass 1.0, we have a very big announcement. Masterclass 2.0 is going to be starting this week. And so if you guys enjoyed that first Masterclass, you found it valuable and it's helped your trading, you definitely won't want to miss Masterclass 2.0. All right, so what has the Fed done? So last week we had a 50 basis point cut. Obviously, we've had a tremendous, let's say, downturn in inflation. So we had a 2.5% inflation print, which is historically low. And so that kind of gave the Federal Reserve the leg room to be able to cut rates, not by 25 basis points, which was the expectation, but by 50 basis points. Now, like we discussed last week during the Fed meeting or during the press conference, traditionally after a rate cut, and we haven't really had one in about 4 years, so we're really going on, I'll say, outdated information. We'll have to see if it's still outdated, but we'll have a month of bearish retracement after each rate cut. And so that's why I'm expecting the market to start turning down in the next few weeks and probably continue on a bearish retracement for about a month. At least that's what we've seen historically. Now, the Fed's miscalculation is that they were hoping that the 50 basis point cut would impact the Treasury market for the bonds. Bond yields haven't moved at all. We'll actually check them right now to see if the 2-year or the 10-year bond yields have moved. For those of you guys who aren't really well-versed in economics, I'll explain something. There's a few things that are indirectly tied to the federal funds rate. Okay, so when the Federal Reserve issues their statement, what they'll typically do is they'll say, we're issuing the target range at 4.75 to 5%. Now, what that means is this is not a hard set line. This is what they're trying to target for the rate that banks lend to each other. And so the way that lending goes, I don't even know why I'm going through all this, but I don't know, free education for you guys. If you appreciate this or enjoy this, put something in the chats. If not, and we'll know just to kind of stick to Forex stuff. But the way that lending works in America is you have the Fed funds rate as the top. Okay, so let's say it's 4.75%. The rate that banks lend to each other is basically close to this or at this. And so you have the member banks of the Federal Reserve System, there's about 12 of those. And then you have the largest commercial banks in the country, which make up that really the largest component of the Federal Reserve money-making system. And so you have JP Morgan, or Chase specifically, Bank of America, Wells Fargo, Citi, and then what's that new one? Truist. That was a combination of SunTrust and BB&T. And so those largest commercial banks, they lend to each other at the basically the best rates possible at the Fed's rate. Then what those banks lend to the best borrowers meaning, let's say, like if Elon Musk walks into JP Morgan and says, here, I'll pledge some Tesla stock and give me money, he's about the top of the stack. He has a pretty good credit score, you could say. And so that's called the prime rate. Okay, the prime rate is the best rate that banks lend to their top customers. So if the more rich that you guys get and the more that your credit you have a business credit line with that bank, and the more that relationship strengthens, you'll be able to borrow as close to prime. Now, the one layer below that is where most of people will land. Not most people. Most folks that are kind of paying attention to their credit and trying to get better rates and things like that, they'll have prime plus. So prime plus is usually the prime rate. Let's call that 5%, plus whatever commission that they're going to add on top to lend you that money, whether it's 1%, 2%, 3%, whatever it might be. So you'll do prime plus whatever their custom rate is. So you'll be paying 7% for that mortgage. Make sense? And then the lowest credit borrowers will basically let's say that the bank may give a credit line to a credit card company at prime. And then that credit card company is going to charge you 20 to 25% credit card rates. And then this game just keeps going where borrowed money is being lent out at higher and higher and higher rates. And every institution is arbitraging the rates of lending. Does that make sense? And so the suggestion that the Fed has is really just to impact all those downstream things. And it usually has a lag. That's why I always vote for short-term bearish action after a Fed meeting and long-term bullish. Because in the short term, there's really not going to be any immediate change. It just shows that we only ever cut rates when we're in a recession. And so right now the market's like, well, okay, well, we're clearly in a recession. The media is not talking about that because they're still kind of hung up on the rates thing. And so eventually, once America realizes and the whole world realizes, oh, the Fed is cutting rates probably because we're in a recession, then you'll have a downturn for about a month. But then eventually, once the impact of the rate cuts start to hit the banks, start to hit mortgage rates, commercial variable loans, auto loans, student loans, credit card rates, once those start coming down, then there's a positive economic impact, and that's when the markets recover. That's when institutions like Fidelity and Schwab are ready to put money back at work because the dust has settled. Make sense? So that's kind of where we're at, is the Fed was trying to effectuate these things, and we're kind of in the middle of seeing the effects of the rate cut. Now, here's the most important things that I'm watching that are indirectly tied to this rate. So there's the Treasury yields. I'll put bonds right here to make it simple. We'll put commercial lending, which is institutions borrowing for the sake of research, development, growth, hiring, all the above. These are people who do commercial real estate borrowing in the billions of dollars to be able to, kind of flow through deals. And then we have, why am I spacing on the last one? We have Treasury rates, lending rates. All right, well, just for the sake of this example, we'll just stick to these. So the Fed was kind of hoping that cutting rates was going to affect the Treasury markets, which would bring down the yields. So the way that bonds work is that you can buy a bond. Let's say you buy $500 bond, and it has a yield associated with it, which means that it will pay you 4% a year just to have your money, in this bond. Now, bonds are guaranteed money. And I know I'm not supposed to say that. And when I worked as a wealth manager, we're not allowed to say that, but this is not financial advice. I'm just saying this as a fact. The US government is the last institution that I would expect to go bankrupt, right? Even though we're already bankrupt, they're not going to default on that debt. Meaning, if you buy a bond from the government, it's like loaning the government money, and they have to pay you back, okay? And they'll print the money to pay you back, which obviously they've been doing. Okay, so it's a pretty good way for institutions around the world to keep their money here. Now you're asking yourself, if there's a guaranteed return somewhere in markets, why doesn't everyone just put their money there? Why would you even put your money anywhere else? Well, the answer is you can get way more than 4% return on your investments doing just about anything else. Being on these Zoom calls, you'll probably make more than 4% in a month, in a week, in a day sometimes. Right? So there's a risk associated with every return in markets. And so a lot of people choose to go safer when things are, kind of risky. They'll invest in bonds, and then they'll go into stocks and real estate and commodities and maybe even crypto when things are really, really good. So the way that the relationship between the Fed funds rate and Treasury bond yields and prices work is oh, here's the last one. I just got this together. Housing. Because housing and bonds behave the same exact way to interest rates. And so if you learn one, you can basically learn the other. Is that if rates go up, yields go up. A yield is basically the percentage return that you're going to get on an investment or the percentage that you're paying to borrow money. So the interest rate that get at the bank, they're going to say they're going to give you a specific, let's say 7%, and that's going to be your yield. So if the Fed funds rate goes down, if they keep cutting rates, then the rate that you pay for your mortgage goes down. All right, that's if it's variable. Variable meaning there's two kinds of mortgage rates in case you guys are just haven't bought a house yet. Variable rates means that as the Fed funds rate changes, so will your interest rate. And so if you get a mortgage right now that's variable at, when the Fed was at 5.5%, it's only really going to go down from here. And you're going to get the better end of that deal. Okay. So yields follow Fed funds rate. Same with treasuries. If the Fed funds rate is getting cut and it's going lower, 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 the percentage yield that you typically get on bonds goes down. Make sense? Now, prices are the exact opposite. So if rates go up, prices go down. This is really easy to follow. If you have a house and the interest rates right now are 5% and you're trying to sell it, no one is going to go to the bank and borrow money right now to go get a house at these insane rates. So in order for you to sell your home, you have to lower the price to attract new buyers. So that's why when things are too expensive for people to borrow money and go buy it, the prices have to come down in order to compensate for that. Now, the same thing with treasuries is that as bond prices go down, the yield goes up. Okay, the percentage yield that you're going to get paid goes up. And the same thing the other way around is that if the Fed funds rate goes down, treasury yields go down, and bond prices go up. It becomes more expensive to buy the bonds from the government. Cool? And so the Fed was trying to effectuate all these things at once. They're trying to effectuate commercial and consumer lending. They're trying to affect bonds, and they're trying to affect housing, which are the three major components of the economy. So when they dropped the rates, they were expecting treasury yields to drop. And let's go ahead and check what happened. Not that. Yep. All right, 10-year U.S. 10-year government bonds. So this is the percentage yield that we got here. Let's look at this thing on the daily. So this is the beginning of the year. This is January. We're still raising rates. We're waiting for rate cuts, waiting for rate cuts, waiting for rate cuts. And then around April or May, we started to kind of get rumors of a potential June rate cut. And so we start to see the 10-year bond yield, and 10-year meaning that you're going to be holding this bond for you're lending the government money for 10 years. And so the way that bonds are supposed to work is that the longer you're going to give somebody money to borrow, the more percentage return that you want. There's a big risk that somebody's going to lose your money in that time. So if a friend is like, yo, can you lend me $100 till tomorrow? Okay, maybe I'm not charging interest. Probably not charging interest. It's my friend, right? Now if they're like, yo, let me borrow $100 for a month. Now I'm like, okay, if you're really, really my friend, I might give it to you, but let me get 105 back. Let me get 110 back. Okay. And this is for the sake of example, people. I'm not that petty. But if they say, let me borrow $100 for 10 years. Now, people, in 10 years, that $100 ain't gonna be worth nothing. It's gonna be worth $2. So I'm gonna need a percentage return in order to even take on the risk of this. So it's the same with the government. If you're gonna lend the government money for 2 years, you're gonna get a pretty decent return. But if you lend them money for 10 years, that's where you're gonna get a way more attractive return. So at the height of this quantitative tightening, The 10-year treasury was paying 5% guaranteed money. But at that time in October, the inflation rate was also 5%. So you're losing 5% on the purchasing power of your money, but you're making a guaranteed 5%. So you're just basically standing still. Okay, there is no sideline in the game of money today. If you put your money in cash in a bank, you're losing money every year. Guaranteed. You're losing right now. You're losing about 3-4% a year. So this is why people invest in bonds now. Because there was expectation of rate cuts, we started getting the rate cuts. And then what happened here? Okay, so this is last week. We have Monday, Tuesday, Wednesday, Thursday. This is the Fed meeting. And so this is what people don't understand. Everyone wants the stock market to go up when they cut rates, and everyone wants the bond yields to start dropping. That's the expectation. And what happens is in the short term, there's the opposite. In the short term, you have a little bit of a retest before the next drop. So I'm expecting bond yields to go up, and this is not what the Fed wants. The Fed wanted bond yields to start going down, but just give it a month. It'll all correct itself. Okay? And so bonds and stocks move in the opposite. We're seeing bond yields go up and then crash. And then I think that what we'll see on NASDAQ and some of the indices is a bit of a drop and then a recovery. Put a 1 in the chat if this whole thing made sense, why the Fed messed up. As far as trades, pretty messy market today. It's not really worth trading at these levels. There's a scalping range here that I was trading earlier, but I would much rather not sit here and scalp on the stream. Sets a bad example, and honestly, a little bit distracting because you have to make high, really, really high velocity decisions. Okay, so we had this range here just for members who hopped on a bit late. We had that expansion. This is 4:30 in the morning, so this is pre-session. So we had this little pre-session consolidation here. We had a push above that range, came back down, perfect retest of that golden zone. I took partial profits at those predetermined levels. So we had boom, boom, and then it went all the way up to TP3, and now we just hit TP4. As you guys know, that TP4 is usually that reversal zone or a potential push down for another retest. So the two options would be if the market comes back down to this area and gives us a double bottom, there's a potential for us to take a pretty good position here, off of that kind of pre-session low. But this is looking at things on the 15-minute, and I think that that 15-minute trade already happened during the news. Right now, I would much rather look at the higher timeframes and just try to catch the market where it's going. It's like bird hunting. It's like you want to catch the market where it's going, not where it is right now. Okay, if you're going to look at, by the time that you enter right now, it's already too late. Okay, so I'll be looking at this 19,950. I'm looking at the Oanda pricing here. You guys can just basically look at the previous drop, look at these areas where the market kind of rejected here, look at the area where the market rejected with that wick, and that's going to be our target zone right now. So at 19,950. So the two potential entries for me today would either be first a retest of this, the bottom of this range in 19,800. So that would involve a full retracement of this move. If it dips through that zone, the same level that we were buying at, by the way, this is from Friday. This trade ended up smashing beautifully. We bought on the way back up right here. And then I didn't even notice that it came back for the retest because I had already exited the trade. But it came back for the retest, jumped up to hit the top of this range, and then continued all the way through. Then we already corrected this impulse with this wick. Okay, so that's why I could see the continuation being right here at this level. We've already corrected all these zones. But the reason I said buy down here is because even if the market violates this support, this area is still valid for buys all the way through. All right, so I'd be looking at entries in this range to take it all the way back up to the top of the range. Over here, there's a selling opportunity. And so if you guys are short sellers, you can find some potential kind of intraday trades here for the rejections. But the reason I say take profits is because I always trade with the trend. And even though I'm expecting sellers to step in, I'm seeing buyers still in control. All right. Yeah, we're not really like we're kind of wedging here, meaning that we're creating lower highs, but the trend is still intact with higher lows. Okay, so it's kind of this pressure cooker situation. Typically, you'll have push up and then drop, or you'll have push down out of the wedge, push down, and then recover. Okay, awesome stuff. So I'm going to run one of the podcasts that we have, kind of just let the markets cook up and then take on questions as they come in, if you have any. Make sure to drop a like on the stream if you guys find this valuable. Is the Masterclass 2.0 recorded fully? Yes, 100%. All right, good stuff. So now we just wait for this retracement. I'm personally looking for. Oh, my computer's freezing out on me. Come on. There we go. And I want to move this thing down to the true low. Beautiful. Hey, yo, members, like the entry I'm looking at is right here, right back at the bottom of the range. And the target I had was the 886 from that impulse. But when I'm just looking at this correction right here, look at where the extension level is. Extension level, right where that 886 is, both layered on top of each other. Masterclass 2.0, be there or be square. Yeah, and we'll do a proper vote. We'll do a proper vote here of which podcast you guys want to run, and we can just basically do like a live Q&A here with the podcasts. Make sure to grab your tickets to the London workshop. London workshop is 8 days away, people. Actually, I can't count. It's 9 days away. 9 days until the London workshop. We're having over 1,000 people in Westminster or something. We're still looking for the location. But we're going to have over 1,000 traders there. We're going to have some very big institutional players, maybe some brokers, international brokers that you guys recognize, stop by out there, and maybe some funding companies that we've all been using. So let's go on to the YouTube here and see if we can find a good podcast to watch. By the way, thank you guys. We're almost at 75,000 subs. That's unbelievable. We were just at 40,000 earlier this year. We kind of had a mission to get to 100,000 by the end of August. Slightly behind, but we're exactly where we need to be. Growing the right way, not doing all of yes, we do kind of clickbait the thumbnails, but we're not doing the clout chasing stuff. If I'm putting somebody on and it's because I genuinely, they got something to offer. Every one of the people that we've had on, whether you guys respect them as a trader, whether you don't, whether you look at them as an entrepreneur, these are wildly successful young people that have absolutely beat the game, and now they're doing side quests. And there's always something to learn from these folks, whether it's how to turn your trading profits into a legitimate business and how to, invest that outside of trading, how to use social media as a tool as opposed to as a distraction. There's always, incredible gems to pick up, but doing it the right way ensures that, we respect you guys for supporting us. Like, bro, I'm very selective with my time. I'm not wasting time watching even a 15-second ad video, nothing. I pay for YouTube Premium. You can get money back, you can't get time back ever. And so if you guys give us 30 minutes, an hour of your time, my goal is to make it as valuable as possible and as value packed as possible for the time that's allotted. And I know that, we kind of hit, I don't want to say a bump in the road with the content that we were creating. But I think now we have it dialed in, which is the perfect mix of value, perfect mix of entertainment, because it can't be so boring to watch. Your brain doesn't want to soak it all up. We've all been in boring classes where your brain just turns off. That is not the goal. So at least like the goal, finding that middle ground where it's engaging enough, it's fun enough, there's something interesting enough, there's somebody cool enough, there's something there that'll get you turned up and then make you kind of more receptive to the real info, which is, hold on, I can implement all these things. This person is not very different than me, puts their pants on the same way. That's really the goal, is kind of humanize success and remind you that this is not, these people didn't fall from the rocket ship with Superman. Like everybody was born and you have the ability to sort of turn your life around the same way. So let's see what we got here. See if we can kind of figure something out. Which video to watch? Okay, we can continue on the Bob Elliott one from last week. So put Bob Elliott one. Can I even do polls on YouTube? Add emotes. Engage with the audience. Start a poll. Oh my God. Bob Elliott. We'll do Swaggy C. Uh, we've already watched the Trading View one here. Oh, Dr. Olson. Three is enough. Three is enough options, but we got so many good videos here. It'd be a shame not to go through. See a few things. How am I going to skip big P? Actually, we'll just leave it as three options. Let me know which one of these. Why can't I start the poll? Oh, here we go. How do I feel about rates being cut? Personally, I see it as a sign of a weak economy because if you're going to cut by 50 basis points, and we just crossed the threshold for inflation officially being back down to normal, it's like if the second, if like okay, how about this? If you're sick and you've been on antibiotics for 2 weeks, okay, on the 14th day is the first day that you stop having a cough. Like the first day that you don't have a fever and a cough, like you check your fever, you're actually back down to normal. Not a single cough the whole day. Do you start picking up the cigarettes and the alcohol and all this stuff that day? Brother, give it a fucking week or something, right? So no, they already started blasting the system, and that shows that there's something a little bit wrong. Um, Unemployment is about, it's like 4% or something. What did the unemployment print as a few weeks ago? Let me do this weekly filter here. A lot of settings. Do a little cheat code here. We have NFP, non-farm employment change, 4.2%. So we always talk about this 3.4% is 3.4 to 3.6 is what it's been from Trump through kind of the Biden era. Okay, that's historically low. That's like the floor. And we started to climb up above 4%. I told you guys if we get to 4.2, the Fed's going to step in. Who remembers me saying this? That 4.0 is when it's going to catch your attention. But because Jerome Powell had warned us earlier this year that we should expect some labor market weakness, I don't think the market's really reacted much to that 4% number. Once we hit that 4.2% print, that's when everyone's ears perked up. And that's why I think the Fed decided to cut rates. And so for me, it's indicative of a genuine weakness in the economy. And I think the labor market is very clearly letting us know. That's my opinion. So the poll is now out on YouTube. Make sure you guys check that out. Do a quick vote, and then we'll see which podcast we're going to review here. So when's the next master class? Yo, how do we only have 44 viewers? This is crazy. This has been a heater show. Is the monetization on or something? Okay. Interesting. All right, it's a tie right now. Let's get 10 more votes in. Just go ahead and vote on that poll that's in the bottom of the YouTube real quick. Let me know which one, and then we'll just let that ride. Do you guys want to talk markets or politics real quick while that poll loads? Let's look at global news. Nope, let's go to FX Street. By the way, if anyone has a connection at FX Street, tell them to contact us for the FX Summit. Would love to have Forex Factory and FX Street out at the summit. That would be incredible. Big fans of the team. We got free tickets for you guys, free VIP tickets for your whole squad. A lot of the same partners you guys have are going to be at the FX Summit, so we'd love to see you guys out there. If anyone's connected, tell them to contact us. info@fxsummit2024.com. Hit your boy up. Let's see what Valeria Bednarik is saying. Okay. All right. In 2026, the terminal rate of 2.9%. So we're really only going to go from about 4.75 down to 3. Yeah, we're not really going to get the rate cuts that people are expecting. We're not headed all the way back down. They're trying to normalize at 3%, which will not happen. They're going to have to cut more if we go into an emergency. The decision will depend on macro data, of course. It always does. Anything new here? Fed's key rate is 4.75. Benchmark deposit at 3.5. Where's the talk about PCE? Control F, PCE. There's no way. I clicked on this article because it talked about PCE, and the only mention is at the bottom. The country will publish the August PCE index on Friday. Okay, so PCE does come out on Friday. Good stuff. Yeah, no one really believes the government numbers on inflation at all. But PCE is slightly more important than CPI, way more accurate of a measure. Fed Powell speaking where? U.S. Treasury Market Conference. Oh, God help us. We have final GDP. Okay, this is good. This is good. This is good. This is good. So GDP already got released in a few different components. Okay, so we have the preliminary GDP, we have the advanced GDP, which is the second revision, and now we're going to have the final GDP. Let me see. They're expecting 0.2% increase in the month-over-month GDP numbers or PCE numbers for inflation. All right, Swaggy C interview 1. Let's go ahead and turn that up, and we'll just let the markets play out. Wait for the market to retrace down to our entry.
Your future is at your fingertips. Take advantage of the flexibility.
Because I didn't really understand what was happening until the medical situation happened, until FTMO started kicking off U.S. clients. Then I was like, wait a second, this is deeper than just, like the numbers. This is real about the direction of where this is all going.
Correct.
But you see, like the Mr. Beast model is he says that instead of focusing.
So, but I was
we'll
saying
post a picture of this later in the post.
I didn't open no courses until I made a good amount of money in trading, started posting on social media and Instagram. 2020 is when I came up with like, okay, let me just do a course. And I don't, so this is my vision board for this year, basically, right? But I still have you can look at it, but I still have my original vision board from, last year, right? Like do more MMA, happy marriage. I don't want to be a billionaire this year, but that's just my overall goal because one of my posters in there is billionaire. I want to make 23 million this year. New funding is just there, but that's just my overall goal this is the house. That's the house in Puerto Rico. I got the house, right? So this is the things I wanted to do.
I love the family and happy marriage. Not to get away from
It's
the
important.
professional side,
It's important.
but it's important that you put this on here.
I wouldn't have been
Not
here if
to-
it wasn't for my wife, bro. I wouldn't have at all. Like, she's the one who told me to get back into trading when we didn't have money coming off TV. You know, if she didn't do that, I wouldn't be here.
This one speaks to me specifically, but I really appreciate you sharing this.
Yeah,
with us.
but I was
we'll
saying
post
is,
a picture of this later in the
yeah,
post.
so what I was saying is that this is my one for this year, but I had one when I first started the course. Let me tell you about the Astro. My first goal for the year for like students was like, all right, I just want to get 500 students this year for my course and see what happens. I got 12,000 that year just off of posting. And COVID, maybe, of course, we were at home, but
it was the biggest launch in Forex space history.
It was
at that point
crazy. You know what I mean? So then I got a mentor now that I can actually like talk to and reach out anytime I want, because he actually got me started in this industry. Like, I was broke in
Were you even trading when you were playing basketball, or is this after?
Oh no, I was playing basketball. I dropped out.
I'm trying to find something that's relevant to everyone. Like the intro story on Swaggy is available everywhere. I'm trying to find some, really key gems that, and you guys can go through this whole thing on your own, but I'm trying to find some key gems here that we can cover.
How do you balance trading and learning with all that? Because those are the hardest stages. Those first 2-3 years were the hardest stages.
It was, but I wasn't successful though. You know what I mean? But I was learning. And people don't know I went to a Division I basketball school, played basketball there, yada yada, whatever the case may be. But the thing with that is, people don't understand. After classes, you have workouts. Because I went to a D3 school and a D1 school. D3 is just, you go to school, you do whatever you want. Oh, we got to practice from 4 to 6. That's it. Not serious. Then I transferred to a D1 school. Bro, when I said we had like film, then workouts, more film, then an individual workout, then a team workout, then staying after to get shots up, then recovery. Bro, from noon to 8 p.m., I was like, me and the team was just locked away the entire time working.
And you're physically exhausted.
Physically exhausted.
So like, it's a different thing from when you're working all day on your computer.
Correct.
And then you got to learn trading after.
Correct.
Like when you're physically exhausted, your brain, you're just not focusing on the stuff. How are you balancing both?
So one of the reasons why I'm actually happy that Ty Lopez is like my actual mentor now, that I can actually like talk to and reach out anytime I want, is because he actually got me started in this industry. Like, I was broke in college, and I was a big battle rap fan. So I was watching the battle rap, but then there was an ad that came up, and it was Ty Lopez, Here in My Garage, yada yada. I bought the 67 Steps course. And then in that, he mentioned trading. He didn't go too specific, but he was like, things you do to make money if you don't have too much money, trade, social media marketing, all this other stuff. And trading was the one that got my eyes. And I got into Forex because at the time, stocks was like, you need 25,000 to trade more than 3 times. I didn't have that much money. I had no money at all in college. So when I was studying and how I balanced it out was like, I was like, okay, I had no money in college, like literally like $5, $2, $10, no money in college. At the time, there was no deals, no NIL deals, because you couldn't, if you were playing Division I, you can't do any type of work or gaining money anywhere else.
You can't get money for your brand.
You can't do that. And mind you, I wasn't.
So you're working your ass off.
Correct.
You're there damn near 24/7 because all your physical energy is going.
Correct.
You can't build a personal brand and make money.
At all.
You have to make it work outside.
You gotta do something
while you're exhausted.
And for me, what I saw was the best player on my team was going overseas, but they weren't even making 6 figures like when I was there. For me, when I was at this, I wasn't even playing, right? I was on the bench just cheering them on and yada yada yada. So I'm like, all right, if I'm not really playing, and the best player who's averaging 25 is going overseas, and they're not, really making, I gotta figure something out. And then that's when I like, okay, I would come in and do the bare minimum. Unfortunately, I'd work out, do my workouts. Right. The minute I got home, studying all night, so I would skip parties. Everybody from my colleges know I would skip parties. Like I was like I would have, I think I went to one party in my entire college career, and that was called Palooza, which is like the basketball team, the baseball team, the football team. It's like Midnight Madness, basically. Right. Like you all come to the gym
and you
have
have to, like, look, at that point, if you're on the team and you're living that,
you got to go to one of them.
You got to experience it so you don't have that resentment later,
Correct. Correct. So I had to go to that because that was like every single team, every single person had to come together. So, but as far as like regular parties, I didn't do that. So I studied. And what happened was I studied for a year and still didn't really make too much. I made $250 in law.
So those of you guys that are asking yourself how you're going to make trading work with your job, with your family, with all these things going on, it's possible. But what are you willing to give up for it? Some people aren't willing to give up the parties. Some people aren't willing to give up the social events. Some people aren't willing to give up, all the unnecessary things that are distracting you away from your success. And so the more things, the bigger your dreams are and the more you're trying to do, the more you're going to have to give up for it. Right. So some of you guys might not have to give up the smoking, the drinking, all these things. But if you want to be a D1 athlete and you want to have a good family and you want to have a good professional life, you can have all those things, but you'll have to give up, a lot of the nonsense in order to get there. So if you guys have big goals, understand you'll have to make big sacrifices, but they won't feel like sacrifices because your goals are so much bigger than the short-term pleasures. I hope that makes sense. Like going to parties in college is fun, but you know, $10 million house in the richest part of Puerto Rico, next door neighbors with Logan Paul. I don't know. Sounds like it's worth 5 years of sacrifice.
What made me drop out of college was we lost in the first round of the playoffs, like a year after, so a year of studying, and we lost on March 6th. March 10th was my first full week. My first full week of like no training, no basketball, just like no, like my 12 to 8
years, because you've had years where you're just every year you're doing that.
12 to 8
and
schedule
you finally have your time back.
And once the first week I did that, I made $2,000. I had the screenshot and everything. $2,000 in my first week of just no practice, just go to class and then you're free for the day. Once I saw that, I said, nah, I'm done. I'm like talking about the 3.
Is your financial advisor underperforming?
Yo.
$100,000,
bro.
$300,000 a month or $400,000 a month. I'm like, okay, we have enough money to pay for a penthouse here for the entire year and still have, you know, X amount of dollars left over. And that's just 1 month. So I'm like, babe, let's just do it. So all the times we done went to bigger places because of me, Bailey would have been perfectly fine if we'd have made all the money we've made over the last few years and stayed in Missouri in like a 1
There is no way.
I'm dead serious.
Because I mean, obviously you've met enough
Missouri, Bryce, where you at? Stand up.
Someone that's finally having a massive breakout, but then the expectation of higher living standards from their spouse makes them want to get the next car and the next house. But you're saying she was fine with that, but this is for you.
Yeah, and I've also started something this year where it's like all the money that like I make and stuff, even though I make all the money, like I'm letting her control it because she's so much better at not spending than me. If I see, I'm like, okay, babe, let's do the private. We just did a private jet last week. She's like, babe, we could have just flew first class from Miami to for $300. No, let's pay $30K for a jet. Right. So I've started to be like, okay, all the money we make, like I'm gonna take what I want for myself, X, Y, Z, for the projects and businesses I got, but you just control it because you're so much better at keeping money than me. Prime example, I gave my wife, I think, I don't know if it was like 80K, 1 month, something like that. And then 3 months later, I was like, hey, babe, you need extra money? No, I still got 75K left. How the hell did you not spend no money in the last 3 months? You know what I mean? So for me, it's like, okay, if I really want actual wealth, let me.
Ladies, if you have that personality trait, hit me up. All right. I'm just throwing that out there. If you that's just crazy.
It's been me, but it's like, okay, you'd be better off, you know, handling stuff.
This is actually,
let me know. Let's hop over to the Dr. Olson interview. I want you guys to go ahead and check out the swaggy one on your own time, because especially if you have a significant other, if you guys are married, definitely watch this, because all the decisions that they ended up making were so different than the advice that you get from your friends and from your family. Super important to hear that. And if you don't have rich mentors in your life and you're always talking about, yeah, but I don't have rich mentors, what? You got it on YouTube University. All right, it's the way to go. The Dr. Olson interview was very insightful, but I feel like a lot of people skip over the valuable stuff. Is your broker safe to use?
Wow. So technology tools to help reduce.
So thank God for timestamps. Everything will have its problems. The concept of democratizing. Awanda, recent updates. The next crypto bull run. Oh, yeah, this is the heat. If you guys hear me talking about crypto all the time, just know that I've gotten some really good advice over the last 6 to 12 months. By the way, pretty good sell opportunity here on NAS. Pretty good sell opportunity here on the double top. We'll see if it rejects, but if it does reject here around the 950, 955 area, we could see a pretty good kind of like double top Batman ears situation here, and potentially a nice sell opportunity.
Okay, so speaking of reducing fees and having a low fee exchange, let's shift over to Luque. Can you give me an update on how the platform is doing, what recent updates?
Oh, one more.
That's helpful, because there's a lot of, I guess the narrative right now is that the next crypto bull run's right around the corner, right? We have the Bitcoin halving is going to be next month. Typically within probably 1 or 2 quarters after each halving, there seems to be a lot of more interest into crypto. There's a lot of institutional interest. What's your outlook on the crypto market?
So, I mean, first of all, I'm a little kind of tough on that. I mean, Bitcoin, Ethereum, we have to understand these are prototypes. These are the first comers. Think of what you can do better. So I presume, and I'm really kind of super tough, in 5, 10 years, these will be footnotes. you will have rapidly new products which will suddenly gain prominence and bring everything together. So, and also it is very, kind of, I find, just from a history point of view, it's so fascinating to see what's happening, who will play out. So it's like a big battle.
So kind of sum up what he says is that Ethereum and Bitcoin, because I kind of pushed back on the Bitcoin Ethereum being prototypes. I was like, Ethereum for sure, because Solana just beat it out, but nothing is going to compete with Bitcoin because it has too many unique qualities. But I'm trying to find something where he says something about something relevant here.
In the context, in the space.
I mean,
it's crazy to think about it.
Brother. I know I was talking about YouTube Premium earlier. I'm on the Chart Addicts account, not my personal, just
myself,
for some of you guys.
who are really knowledgeable about the markets, they're very disappointed. Because the debate is held around the wrong issues. And again, it's very sad to say that in 2008, it was clear that certain things, remedy had to be made. And, small remedies were made, but nothing in comparison to the scale of the problem. So it's like, someone burns down his house, and then, you come back and then you say, okay, next time I'll give you kind of a few, a little bit of medicine. But more.
Yeah, I'm gonna have to translate some of these things. Dr. Olson was saying, like, in 2008, the system got broken so bad and everything got exposed so bad that none of the solutions that we had put up solved the problem, just made it worse. And so it's like if your house burns down and they come back and the example he used didn't really make sense, but it's like somebody gives you like a cup of water. Like, yeah, next time your house burns down, I'll get you a cup of water, or I'll get you some painkillers so you don't feel the heat burning you. It's like, bro, that's not going to solve the gas leak. That's not going to solve the problem with the wildfires. Like, we need to solve the issues or they're going to keep coming back worse and worse, which is kind of what we've seen here. And that's why most of the problems that we're dealing with now, the inflation issue, was because of the amount of money that we printed in 2020. The amount of money we printed in 2020 is because the system was too dependent on debt and cheap credit from 2008. And now the quantitative tightening that we had done the last 2 years was a response to the inflation. And now these rate cuts, are due to a recession that was caused by the rate hikes. It's like all the Band-Aid fixes that we've done since the 2008 financial crisis have just snowballed the issues, and we keep doing these duct tape Band-Aid fixes and never actually solving the core issues, and they just keep getting bigger until, I don't know, the government's gonna have to default on its debt or something like that. The audio on this is kind of buggy. I feel like it's not going to help too much. See if we can get back to the Swaggy interview, though.
Women have different challenges in trading.
Correct. There's prop firms, but there's educators. I mean, like, it's not going to work. But the fact that they're paying, $300, $400 for a 50K account, and then like they're, all you got to do is make, 10%, which is 5K. People don't understand. People are looking at the 100K payouts. 5K is enough to be life-changing
for most people.
To be real, right? Yes. My life-changing moment was the 2,000 a day where I realized, oh, this is real. If I put more energy into it, I can do it. So for me, if I had prop firms back in 2015, and I mean like, maybe because FTMO started in 2015, but they weren't.
I mean, like actually have
access to it, bro. I would have been successful a lot faster because
that's probably when you were putting the most focus on the trading too, right?
Heavy.
And that's where it would have came in the most clutch.
Like traders today don't understand what they have because it's not just prop firms, but there's educators. We didn't have an FX summit in 2015, 2016. Like we didn't have something like that where it's like, oh, we got the biggest community of actual, verified businesses and verified traders coming together and like speaking life into us. We didn't have that. What we had was we got 3 people having courses online and then YouTube and baby pips. That's all we had. You know what I mean? So the fact that in 2024 we have prop firms, even though like a lot is going down, we still, let's just say FTMO. We still have FTMO. And
I'm a beneficiary of prop firms.
Right.
As much as I have an opinion on them,
right.
The biggest payouts I've ever had were from prop firms, and they do provide the #1 opportunity. That's a fact.
You know what I mean? So it's not even close. Firms, there's FX Summit, there's actually.
Speaking of prop firms, if you guys want to use Apex Trader Funding, use promo code Chart Addicts. Promo code Chart Addicts, 80% off your challenges at Apex Trader Funding.
That's off to learn it. You're going to charge your money for it.
Correct.
And now, just like you said, think about if I can go online and just watch how many videos and go and check out whose course. And I'm glad that you pointed that out, because if you just started in COVID era, you don't really understand how blessed you are to be around today.
Nobody does.
You were even trading before I did. You didn't even have the resources that I did. And I had like no resources, right? So
when you're 85 years old on your deathbed, you're not going to wish.
Big Alex.
Have no excuse not to be successful.
Correct.
You've had to go through tons of challenges that even at a young age, most folks, even at 27, don't get married.
Correct.
Even at 27, don't have a kid.
Correct.
They aren't on national television with everyone. Like if I fail, maybe I get to fail in private. If I'm on national TV, my family's calling me, is everything all right? It's fine, Mom. I'm
Correct. Correct.
So you've had such a unique set of challenges, but you've also been able to make it through. Besides from what you would do starting over with prop firms and sort of using that model,
Correct.
Is there any?
And yeah, I can't even fail in private anymore, bro. If I'm losing these trades, you guys all see it. Okay. It was fun while it lasted.
Feel like, all right, from day one, focus on these skills, because this is what you now realize will make you successful in trading and in business. The specific skills.
Like that would get me to my goals faster, or what do you mean by that?
Like some folks, they tell me that discipline and not like once you start making money, you don't go out and spend. You still keep that same exact momentum for a long time. Are there any skills that like at first, obviously I can read it in a book,
correct,
but now from the perspective I'm at right now, I now realize certain things were true.
Correct.
What things would you say are true?
A lot of things are
and
true.
that have helped folks.
A lot of things are true. So like your last trade is not like guaranteed to be in the future, meaning like you can make 10K, 20K, 5K in a month or a payout. Like I had somebody who, literally I know somebody who said for 3 months straight, they made $12,000 on a prop firm, quit their job and everything, and they haven't had another payout, and it's been a year. And like they're credit card debt, and now they're like crying every night. So it's like, I've learned that you have to save money. Just because you're making 12K a month, you can't just spend 8K a month, right? We talk about prop firms who are making, 8 figures. Their expenses are 8 figures. It's hard to have that as an actual model, but as a business, you have to actually talk about my wife, like actually save a lot of that money. And I realized that a lot. Well,
save your money, people.
If I realized that early on, that like if I'm making money, make sure I keep it. Don't increase my lifestyle too quickly. Then that helps a lot. But actual skills, I go back to what I was saying, which is one of the things that I'm doing is that like practical skills that pay you, that you can use to fund a prop account, or use to fund X, Y, and Z, right? So prime example, if I'm a kid right now, and Iman Gotsi and Andrew Tate talk about all the time, there's no reason why I shouldn't be learning all these other skills so that I can cold DM Swaggy and say, yo, Swaggy, I can do X, Y, and Z for you. People know I will hire anybody if they have the skills. Somebody can DM me right now from watching this interview and say, yo, Swaggy, I've been studying, whether it's videography, email marketing, social media marketing, I can post online, whatever they can do to make my life easier. I'll work for you for 3K a month, 4K. I will hire them and give them a try and try it out, because the money that they're making, even though it may be the same as their 9 to 5 or a little bit more, they have more time to actually study trading and learn trading, because you're not locked at a desk from 9 to 5, actually. So from a skill perspective,
and you're innovating.
Yeah, you're innovating.
You're not just working at a large company where you're kind of like checkboxing. Like you are building this from scratch. And when they're going to go on to the next gig, you don't realize how valuable that opportunity is.
Yeah, nobody does.
Most large companies are actually in decline, but they don't look like it. So from the inside or from the outside, everyone wants to join Merrill Lynch, for example. When I was inside Merrill Lynch, people were trying to jump out the window. They were putting nets out outside the window saying, you can't jump out. You're coming right back up.
Oh, wow.
And so I think that you providing that opportunity and then getting that front row seat is not just, okay, you're Swaggy, you got all this lifestyle, people can come learn from you.
Right.
But also a perspective of figuring it out on the spot. And then somebody who's in a creative art, that's their whole job, is like, okay, where am I going to find my next client? How am I going to build my next project?
Correct.
They're getting the front row seat.
Correct.
Folks watching this, he just said, I'll hire anybody who's got a skill. Y'all better start bringing in their applications.
Y'all got the skills, we will hire you, just like, because we want to grow our team and build. But people have to like have that ROI where it's like, make sure they're actually giving value.
And I have one last question.
For sure.
And I appreciate you guys sticking around. This is not a trading interview, but my God, it's beyond trading. Because I think everyone had this idea of being a full-time trader, and you realize that your life after trading is what matters the most.
Correct.
What are you doing with this money?
Right now?
No, I'm not you specifically. I just mean like in general.
Got you.
So what would you tell folks in terms of because the perspective of that question is, this is what people would think that trading is.
Correct.
Then you make the money and realize, oh, it's life beyond trading.
Right.
What are some things that you thought were true? And then now from your perspective, which is very rare, there's about 20 houses in this neighborhood. There's about 20 people that can answer this question,
Right.
but not a lot of people are in markets. What have you learned to be true and not true about success, specifically financially, that you could share with folks about their ability to be successful?
Yeah, so things change a lot. Like things, you have to be prepared for things to actually change. Myself, I would think that, oh, what I'm doing at 24, 25, 26, I'm gonna keep doing for the rest of my life. Things actually change and you gotta adapt to it, right? So like, whether it's courses, whether it is it's trading, right? Like prime example, like I still trade every single night, right? Or I'm active every single night because I have like a platform where my audience can trade with me and comes in the room and stuff like that. But like, there may be some times where like for 2 months straight, I'm not trading at all because I'm focused on something else, right? And I never thought that would be the case, 2, 3, 4 years ago, right? And I'd say this all the time where it's like, we look at Conor McGregor and Rihanna all the time, right? Conor McGregor was the craziest fighter for almost 2013. Aldo, Mendez, Alvarez.
You said it, a decade. That was my guy. Yeah.
This is what happened. Fought Floyd, got 100 million. Then sold a whiskey company and got 180 million off of it. Then what? He fought 2 times in the last 5 years, right? Like, and I'm not saying that about trading. I'm just saying that things change. And Conor thought he was going to be always fighting, and then it kind of changed. After that, he fought Habib, fought Poirier, and then fought Poirier again, right?
So what you're saying is like what you do with the money during your peak years, it matters more than your peak years. Is that kind of where you're getting at? Where like Conor put away the Floyd money, he put away the whiskey money, and now he doesn't need to constantly be doing that.
Yeah, because if you look at the money he got from Floyd, and even before that, what did he do? He like invested in actual proper 12, right? An actual company and built it up. He didn't just blow it on like, yeah, you got some things, but he didn't blow it on like, I'm gonna spend $80 million on just all like the cards, all the Rolexes, all the everything. He like, I'm gonna start a company that's gonna pay me when I'm not fighting type thing.
Yes.
Even Rihanna. Everybody's been asking for a Rihanna album for a long time. What does she do? She's a billionaire, not from music, from Savage X Fenty, her lingerie brand. That's what made her a billionaire. And like, so like, she hasn't made an album in years because she's so focused on that. And she never thought, oh, I'm gonna leave music to go to that. I'm not saying people here are leaving trading because I'm always gonna be in the industry sometime. But I've also said that I don't know how long it'll be, but there may be a time in the next 2 or 3 years where like I'm not in the day-to-day trading and I'm more investing in terms of like longer term or swing trading, like longer term, as opposed to every single day I'm day trading. Because at that point, my time, I like spending time with my daughter and things like I don't need to be day trading. I like to invest in swing trade as time goes on. So things change. You got to be open to adapting.
That Rihanna example, I think, put it all together. Anyone here, anyone who's listening to this that thinks that you have a fixation on becoming a full-time day trader and you have to make all your money from trading, if Rihanna, who her entire brand is built on music, can just use the music to leverage her into something that she genuinely cares about, that has a much bigger potential to impact more people. That's her billion-dollar brand. She's not even going to touch that on music. And so, but that's what everyone knows her for. Like, they might know you for trading, but like 99.9% of your wealth might come from the things that you've done responsibly from your peak years in trading.
Correct.
That's what everyone's got to pay attention to. When you're having your peak years, you're going to be tempted to spend to keep up with everyone on social.
Correct.
But if you put that money aside, you get to live this life forever.
I couldn't agree more.
You get to become somebody important. Chris, I can't thank you enough for this, dude. I've learned so much from this.
Bro. It's just like the book you saw in my closet, the tortoise and the hare.
Give me the 1 out of 10. What'd you guys think? Give me a rating, 1 out of 10 for this interview. What'd you guys think? Interview style, the pace, the topics discussed. Do you guys want to see more things like this? Obviously, we're going to try to really kind of double down on the trading side. So we'll probably just do the trading questions first, really get everybody that solid info. But really, I'm trying to get these guys that have graduated from just trading and have done something incredible with their life and show you guys, you don't have to be a social media personality, but this whole idea of taking your money, especially when you're crushing it in markets, and instead of improving your lifestyle right away, you invest in things that over time will ensure that lifestyle forever. That's the main point of this.
Is more important than speed, just like you said.
That's it.
So I appreciate you for this giant tour. I appreciate you for speaking to folks at home, and I really look forward to people coming to meet you at the FX Summit if you're going to be out there. So Chris, thank you for your time today.
No problem, bro.
And I really appreciate that. Peace.
You know?
All right, so then we ended up doing a house tour. He's an absolute gem of a guy, bro. Definitely check out this full interview.
Actual books. He spends 80% of his day reading. So if his day is being up for 16 hours. He said literally for 12, 13 hours, I'm reading the entire day.
And the rest, you're just making 4 or 5
It's decisions.
impactful
That's it.
decisions.
Just
That's it.
impactful. And people got to realize that, like, you're going to make your money based off decisions.
That's Logan Paul's house, by the way. Like, just to give you guys reference of like how crazy this is.
You're making, not necessarily, you know, how much you're spending.
We had armed security pull up on us when we walked into the neighborhood because it was just me and my video guys. And then they were just like, who are these random people? Because everyone in the neighborhood knows each other. So they're like, who are these random people here? And they stopped us on the side of the road. And like, we had this whole thing. It's crazy. I absolutely love this place. If you guys want the full tour, it's available right on YouTube. So you guys can check this out. We do a full house tour. So you guys can kind of check out what does a $10 million mansion in Puerto Rico look like.
Better at it because community. So,
but the most interesting part is Swaggy's book collection. So he's got this entire closet of books, and like a lot of people have libraries and stuff, but they ain't reading these books. I opened up a few of the books that were in this closet. Every one of them is annotated. Every page has sticky notes, highlights, certain notes and things. Like, this is how you're 29 years old and you're doing all of these crazy things. So you guys want to do spectacular things in your life, you got to make spectacular choices, spectacular sacrifices that other people just aren't willing to make. And if you're willing to do those things, success is knocking at your door, not the other way around. It's the way it goes. We might end up getting this sell later, but to be honest, the reason I haven't taken a trade is because I can't tell you guys if the sell or the buy is going to hit first. Typically what happens on Mondays, are we going to just kind of correct that entire wave and then start making our move back up? Or are we going to make the move up first to the 19,950 area and sell back down? Either way, you guys have the levels marked off. You guys should basically have all the tools that you need to make it through. Just some last reminders. Head on over to fxsummit2024.com or just click the link in the description. It'll make your life so much easier. All right, head on over to events. The link is also in the description, and just go to the London workshop to register for London, which is October 2nd. If you guys are in the UK area, make sure to register. And then obviously the FX Summit in Dubai, the largest trading conference in the world. You guys can come meet Swaggy C, Umar Ashraf, Tory Trades, Ali, all the biggest names that are around today. You guys can come and meet them. The biggest trading podcast. We have Words of Wisdom. We have the Forex Beginners podcast. Just some of the biggest trading names, influencers, traders, institutions, KuCoin, Kraken, Bybit, Gate.io, Bullish Exchange, Binance, some of the biggest names in the world coming to speak. So looking forward to having you guys out there. Make sure to register. Use promo code ChartAddicts for tickets to the FX Summit. Promo code ChartAddicts UK for tickets to the London event. Also, the Masterclass 2.0 is now open for registration. If you've taken the 1.0 class, you found it valuable, make sure to register for the 2.0 class. It's going to blow your mind. You definitely don't want to miss it. All right. Happy, safe trading, everybody. If you can leave a like on your way out, it'd be very appreciated. And I'll catch you guys tomorrow morning for another live trading stream. Happy, safe trading. Peace. All right. Good stuff. Pretty slow stream on a Monday, but a lot of people saying that they just don't get the notification.